From a sentiment perspective, we can get bogged down in the news and feel that there's a lot of changes happening and a lot of uncertainty. Or we can look at some prior lessons that we've learned and understand that there is some certainty in Australian property prices going up. And let's get involved and use that to our advantage, because we know we can't save ourselves wealthy. We can't save enough money to just cash-wise build up our retirement fund. We need to be investing to get that wealth creation. So the news is very short-term. We need to build a plan on a long-term strategy and just keep working towards the strategy.
You're listening to Property Investor Tales, stories from the front yard.
Today, we are here with the wonderful Megan Wolfenden, Senior Property Coach here at Positive Real Estate, and we're going to be talking things all sentiment and the property market. So welcome, Megan.
Hello, Emily. Great to see you. Yes, I'm excited actually, because it is an interesting topic and something that people often ask me about. And whenever there's a lot of interesting news going on, people get concerned and they want to know, what is the outcome here? So I'm glad we're talking about this today, Emily.
Yeah, great place to start. And I like how you mentioned what's going on in the media. Obviously, there's heaps going on. I think the best thing we can all do is take a strategic breath. So what does that look like to you when we're talking about sentiment and property investing?
Yeah, interesting. So I'll just caveat, this is not going to be an economics chat today.
But we'll leave that to Sam.
A couple of things in there. We'll leave that to Sam. Sam's podcast is awesome for that. But what it does mean is, how are people feeling about their economic future, about what's happening right now, and how does that impact their progression towards their goals? And let's say that end goal is, a great retirement and a tax-free retirement, for example. So it obviously is different for somebody who's got 5 years to retirement versus somebody who's got 40 years to retirement. But it does help if people know that the underlying fundamentals are there for their property portfolio strategy.
Excellent. And what does that look like? So when we're talking about sentiment, we know that it influences the market, but in what ways are we talking about where it might force someone to make a decision that's not necessarily a strategic one?
Yeah, sometimes people have they catastrophize what's going on in the news, or they see a short-term effect and worry that it's going to, amplify. So if there's a 5% change in the stock market or a 5% change in property prices or something going on, they worry if something's going to go into free fall, and how am I going to protect myself? So what we need to look at is some fundamentals. I like to go back in history, but fortunately we've got some more recent examples that are helpful too. If we think back to things like the GFC and the Bank Royal Commission, there was a lot of change in the marketplace, and we can look at those examples, but I really want to look at the more recent example of COVID.
And why make the distinction? Why not talk about those events? Why are we focusing something that's probably more current? I mean, it sounds redundant, but I want to.
It's a great question, because I've been investing since 1992, so I've seen many cycles, and I can come with the perspective that our properties go up in value, the markets recover, all of that type of thing. But for a lot of people, they don't have that history. But we can then look at something we've been through in our own lives, and that is COVID. Here in Australia, I'm just talking about Australia because we had some, pretty long lockdowns, some pretty big changes to interest rates and all of that. We also saw the most incredible property growth at a time when people were fearful and worried. So we have to look back at that as an example and go, when there's more turmoil in the global markets, how does that affect, for example, our Australian property strategy and the results that we're going to get in property? And in actual fact, for anyone that is in the market, I'm really optimistic for them. Everybody that I talk to is, a property investor or soon to be property investor. And so they're they're in a great position given some of the things that are going to happen. So as we know, COVID, after COVID, we had, 13 interest rate rises. Well, we're actually going to see now the interest rates dropping, and a little bit faster than we were predicting, 6 months ago, because we need to stay in line with other countries so that our currency doesn't drop, for example. So there will be some more interest rate drops. Well, what does that mean for our real estate? We know that that means that more people are going to jump into the market, more people are going to want to buy. There'll be, as people are paying less on their home mortgage, they'll be thinking about further investments. They'll have a little bit more cash if they're not paying high interest rates on their mortgage. So suddenly we get this additional influx of Australians wanting to buy any property. And we already know that we've got a low supply of property available. We already know that we're not building enough to keep up with just population growth, whether that's internal population growth or from migration. So consequently, we're going to continue to be in this undersupplied market. So undersupply, higher demand, we know what then happens with property prices. So for anyone in the market, you can take advantage of that. For those people that are not in the market, you really want to start looking at what's possible because when those interest rates really do start to move again and drop further, that's when people go, I wish I was in the marketplace. So we want to do that as soon as possible. So from a sentiment perspective,
yeah, I'm keen to hear about this because you've laid the land, right? You've set out the context. This is where we find ourselves, but it's how we react to those environmental pressures, all that societal force. So where does this lead to the sentiment piece?
Yeah, so it's almost like if we were putting ourselves pre-COVID and during the COVID craziness, and then, 2 years later, we could look back and say, I wish I'd bought back then. It's the same this time. Okay, a couple of years from now, we'll say, I wish I bought back then. And so if we can get excited about our future and understand that property is still a long-term opportunity, right? We want to be in this for the long term. We don't want to continuously buy and sell and trying to pick the market. We want to get into the market when we're feeling that, okay, we have all our buffers, we have the right buying power and servicing. You make sure that your broker is giving you very definite what's possible for you in your buying power, and then go look for really good quality property, the best type of property that you can afford that works for you, and have that plan for that property to be in your portfolio for a long time and to make up part of this incredible portfolio that you want for your retirement future or way into the future. So from a sentiment perspective, we can get bogged down in the news and feel that there's a lot of changes happening and a lot of uncertainty. Or we can look at some prior lessons that we've learned and understand that there is some certainty in Australian property prices going up. And let's get involved and use that to our advantage, because we know we can't save ourselves wealthy. We can't save enough money to just cash-wise build up our retirement fund. We need to be investing to get that wealth creation. So the news is very short-term. We need to build a plan on a long-term strategy and just keep working towards the strategy. Then when things do change, we can go, hold on a minute, am I on track with my strategy? Well, I wanted to buy X number of properties in X number of years, tick, done that. Then I knew I had to hold them all the way through to, growth in that portfolio. Okay, we're in that phase now. So it's about having that look back on your goals. Have you kept on ticking off those action items that are going to get you to your goals? And then just let things run in the market and sort of stay away from too much news if it brings you down. We've got to stay informed, but we also want to have a much longer term view.
Yeah, and I think I'm loving what you're saying, going back to your goals. It's almost like going back to basics. Wait on, if we take away all the sentiment, all the media, what was I actually trying to achieve? And you as a coach, you do that beautifully, Megan. Obviously, I've spoken on previous podcasts about how you've coached me through certain situations. What are you saying to people when they're coming to you and they're saying, I'm feeling uncertain? What do you talk to them about?
Yeah, so the uncertainty will come about through lack of knowledge and lack of education. So it is about getting educated in the fundamentals that create a good property portfolio or a good investment portfolio. So you do have to get educated and stay with mentors who have achieved what it is that you're trying to achieve. And that means not listening to people who aren't where you want to be. So it's tough. You can have family or friends or people around you that don't like the particular strategy that you've chosen, and they'll keep wanting to tell you about it, and they'll keep wanting to tell you why, and the news and things like that. So sometimes we have to keep our investing just in its little bubble and let it run, and not be worried about what people are saying when they haven't had the experience that you're trying to achieve and you're working towards. So I do say talk about investing with the people that have been successful in investing. And, if people have been through multiple cycles, they'll know what to expect. They'll give you that peace of mind and some calmness about what you're doing. If you're talking to people who are very affected by the news and catastrophizing, it's hard to keep your own morale up and your own enthusiasm. So you really want to pick and choose the people that you are asking advice from.
Yeah, great advice. I've obviously lent on you in the early days with all of that, and still do to this day, obviously.
You're doing
it's
so well, Emily.
Oh, thank you. It's funny you were talking about, media and sentiment, and I know I've spoken to you I've spoken to you about this personally. I remember purchasing our first property, and we got all of the opposite advice that we wanted to actually do. And at the end of the day, it was really hard to block that out. And that property has actually performed really well. And thinking back, had we waited and, maybe listened to people who weren't in the position or who were being advised by news headlines rather than facts and maybe real property economics and behavioral science, we wouldn't have been in the position that we are today. So it's great to take it all away, recenter, that strategic breath I was talking about, speak to someone who's been there. I love what you say. Like you've been doing this since 1992. Like you've seen all the big cycles. Yeah, it's
yes, and in multiple countries, actually seen in multiple countries. I must say Australia is one of the best countries to invest in because it's quite predictable, and we know our cycles, we know what our timelines are, and you can get some incredible growth if you just give it time to run. But I must say, Emily, was that your the first home that you had was the one you were talking about?
Yeah, it was. Yeah. And it was super scary. And we bought at auction as well, which everyone told us not to do. We were going to overpay and we were going to do this. And gosh, we held true to our guns in that auction. It was a digital auction room, I remember. Now this is going into a personal story, but it was scary. And to be bolstered by, I don't know, real information got us over the line at the end of the day. Yeah.
And the people that are advising you are like your family and friends. They mean well, and they have their education from whatever sources. So they really are giving it from their perspective. So it's interesting that you can achieve different results just by having a different perspective and having a different understanding of the markets or what you're trying to achieve. So it's not that family and friends don't mean well. It's just that they're not achieving exactly what you're trying to achieve. So we need to keep that in mind. And but also it's sometimes do as I say, not as I do. And I was my father said to me, my father was an incredible businessman and incredible with property. But he said to me, oh, don't get into debt. Don't get into debt. And I'm like, Dad, you've built your whole business on debt. I'm watching what you're doing. And so people do just want to add advice to keep you safe, but you just have to use the knowledge of people that have actually achieved something that you've done. So that brings me to what are some of the things that we do need to do to make sure that we're set on the right path.
Absolutely.
And the number one thing is buffers. I think it's so important that you have that sleep at night factor. And if you know that you've got in an offset account, you've got, if the car breaks down, if a tenant doesn't pay before you get your insurance money, your hot water system blows up somewhere before you get your insurance money, or interest rates start to change, whatever that might be, we need to have cash buffers. And I also say, you know, have another cash pool for your holidays. That's a passion of mine. And then another area where you're sort of saving and paying down debt on your personal home and things like that. So buffers are number one. And that also relates to when a broker says how much capacity you have to invest. They might tell you that the maximum that you could get a loan for is, say, $1 million, but a whole lot of banks will love you at the 750 to 800,000. So there's no point stretching it all the way to one lender that wants you to go, that would be prepared to give you $1 million, because that means you've only got one valuer that works with that lender to agree with what you're paying for that property. And we do have problems in some states with valuations. So we want to have the ability to have multiple valuations or go with multiple lenders, just in case the first valuer comes back with a low valuation. That's going to happen. It's just the market. Certain states we have it more than others. So number two is be prepared for a low valuation. And to do that, you want to make sure multiple lenders that love you, and then you've got multiple choices for getting those valuations and things. That's been pretty key for a lot of people, we've noticed. So whatever your borrowing capacity is, come down a bit from that and have buffer in that borrowing capacity as well. That's really important.
Yeah, it's great. We often try and push it out, like you were saying, but it might actually be detrimental.
Yeah, yes. Yeah, we just need more choices. And so, you know, if for some reason the property's in an area that not a lot of banks like, then you're reducing the choices that you have to get lenders, and that might also reduce your options on interest rates and all sorts of things like that. So giving yourself a little bit of leeway there is sort of a safety measure. Quality. I think, we talked about yesterday design-led property, and we talked about the population, where the population growth is, the infrastructure spend is, and lots of employment variety, not just one or two markets, and then something niche that people really appreciate and like in an owner-occupied area. All of those things are going to help you get a really good quality property.
And something that's going to last long term. I love what you said at the start of the podcast about, a property that you'll be proud of and will take you into retirement. We're wanting to hold the property, obviously, as long as possible, buy well, never sell, or only strategically. So something that's going to stand the test of time. And I was reading some information recently about the properties that have been built over the past 20 years. Each have gone through their own little phase and different styles and building quality. What we're seeing now is some really great designs and choosing something that's going to be really attractive to an owner-occupied audience.
That's right. If we're always looking at what the owner-occupiers are loving, then we know we're in a really good market.
Yeah.
That's kind of putting a bit of a niche on that. That's good. The next thing is making sure you've got a plan. Set a plan and then stick to the plan. That doesn't mean that your plans can't change, but you want to strategically change your plans, not on a whim change your plans. So if you need to have 5 properties in your portfolio by X number of years to get you to your retirement number, then set the plan and keep working towards that. And sometimes it can feel like it's a long way between actions, but just being in the market can be really, really important. So getting in and then staying in the market is important. If people sell thinking that there's going to be a drop and then try and get back in at the bottom, that's when we start to see people missing the market and they stay out of the market for too long. My mum did that. She thought that there was going to be a drop in the market. She got out of the market, went on holiday for a while, came back and couldn't get back in. So it's staying in the market, having some resources in the market is a really good plan as well. Stick to the plan. But you're allowed to reassess. So, talk to all of your advisors, make sure your plan's still on track, that you're taking advantage of, our tax scenarios, or taking advantage of different opportunities in front of you, but stick to the long-term plan, and then just, let it run. And
Yeah.
as I think Sam says, get a hobby.
Oh my gosh, that's exactly what I was going to say. I know I've mentioned how I've come to you with some really big dreams for my own property plans, and you keep me and my partner Aloe on track really, really well, which is fantastic. But part of that is getting a hobby because and maybe it's my personality. I look at it all the time. I'm looking, I'm assessing, and wondering what's going on. And although I do that because it's a passion, I'm not letting it steer me away from the course, and getting a hobby is probably a really good idea. So you focus your energy elsewhere and just let it run.
And what's exciting with your hobby, if you're going to share it, is it actually is great for lifestyle. So now
Oh,
I think you've also got some additional lifestyle goals, and have been pushing yourself to achieve more, because there's a lot of fun behind everything that you're doing. Are you going to share your hobby?
Oh, yes, absolutely. So anyone who knows me knows that I'm a keen outdoor enthusiast, and I do all sorts of extreme sports. So the number one is paragliding. We do paragliding, and then we also do kite surfing. So anything out and about and using the wind and water to get around is just fantastic. But Megan's absolutely right. Like, doing something that we love is keeping us nice and occupied while the plan runs its course. But yeah, the lifestyle, and this is going into another whole topic, but we actually recently moved to a location where we're actually rent vesting. We're letting the portfolio do what it needs to do, but we're actually living in a place where we want to live. And although that's an area that we can't actually get into at the moment, we're working our way towards it by renting in a place that we love and surrounding ourselves with a beautiful lifestyle of these outdoor adventure sports and the sun and the beach, and it's just beautiful. I feel it's a real privilege. And looking back, Megan, that's thanks to the plan that we set in place all those years ago. So it's bearing fruit now, even.
So good. And guess what? There's sentiment right there, right? You've got your
Yeah,
plan in
yeah.
place,
Mm-hmm.
and what's happening in the news isn't affecting how you're running your portfolio, because
No.
you're not affected by ups and downs, and bad news, good news, bad news, good news in the news and things like that. So the
No.
sentiment for you has been all about how do we build that lifestyle, and
Yeah.
that has kept you on track with achieving your goals, which is really great. So congratulations.
Oh no, thank you. And thank you, Megan.
I've got two more things that might be helpful for people that are also just thinking about where they're at. And
Mm,
if they have any sort of concerns, they might want to look at a property that has a finance clause, because that gives them a bit longer to
yes.
really confirm their lending, make sure that the banks are happy, doesn't get them into trouble. So that's a good one for that little bit of peace of mind prior to purchase. And to realize that, the first couple of years of owning a property are the hardest, while you're
Oh, yeah,
getting into the property and getting used to the bills and the
definitely.
cycles, and whether it's your own home, which, people like to stretch to do, whether it's your own home or your first investment or a future investment property, the first couple of years is where you've really got to make sure you're keeping the buffers, make sure that you're managing the workflow and the paperwork, and watching the money flow. And
Mm,
it becomes much easier once you start getting your tax returns back, and you start seeing how it's all flowing, and you start seeing some increases happening, maybe with some rent and things like that. It certainly
mm,
becomes easier. So the first 2 years, you've got to stick it out, put the time in, keep the emotion out of it, and just stick with your plan.
mm.
So that was
Couldn't agree
just
more.
that I thought might be helpful.
No, it couldn't agree more, Megan. And again, bringing this back to a personal example. It was so hard to not be swayed in the first 2 years, and I'll admit it off my own back. Um, it's just so easy to get derailed and to get your focus pulled somewhere else. And life is complicated enough with job changes, partners, family, whatever. Add into that what's going into the market. And of course, we pay attention to it because that's how we're building wealth long term, and we're looking, towards a lifestyle and retirement plan. But it's as complicated. Life is as complicated as it is already. So don't put that extra pressure on yourselves if you're trying to build something that is really 20, 30, well, it depends on your age, but 20, 30 years down the track, whatever. Stick to the plan. Don't get derailed. Take a strategic breath. Figure out where the data and the resources that you're relying on is coming from, because we all know that data can be skewed to whoever's benefit. So make sure you're talking to people who know what they're talking about in those first 2 years, because it's very easy to get derailed.
So true. So let's stick to the plan and create our own wealth, and not get worried about what's in the marketplace. Well done, Emily.
No, I love that, Megan. Thanks so much for your time and for sharing your wisdom.
Thank you very much.
See
Bye
you in
for
the
now.
next one. Thanks, Megan. Bye.
Thank you. Bye.
Hey, thanks for listening to Property Investor Tales. Remember to subscribe so you get notified every time a new episode drops. As you can guess, I love hearing people's property investor tales. So if you'd like to share yours, then please get in touch with me via email at propertyinvestortales@positivementor.com.au. We would also love your feedback, and I would appreciate a 5-star review over on Apple Podcasts or Spotify. Remember, you can watch all of these podcasts over on YouTube at Positive Mentor or at positivementor.com.au. Until then, take care, happy investing, and bye for now.